Hello?
Sounds like it.
All right.
Okay. Thank, thank you for spending time with us here on the cyber risk prevention and protection session. We have a wonderful panel here teed up for the next 50 minutes to share some of their knowledge and expertise as it relates to cyber risk. So I'll quickly introduce myself. I'm Dale Utoff. I'm the Chief Product Officer for Group 1001, which is an insurance holding company that has multiple lines of insurance products. I serve as Chief Product Officer for the life and annuity business, overseeing pricing, product development, and hedging. In the past, I've held roles including Chief Risk Officer, Enterprise Risk Management, Asset Liability Management, and a handful of other things in the insurance space. So I'll hand it off to Linda.
Hi, I'm Linda Betts. I work for FSISAC, and I want to explain what that does. Chances are, if you're in the financial sector, you're a member. So the ISACs were started about 24 years ago, focused on sharing threat intelligence information across the financial sector. There's also energy, health, government, and they share threat intelligence between the sector to hopefully be able to identify and prevent cyber attacks. And prior to that, I've been the CISO of both IBM, Travelers, and the Federal Home Loan Bank of Des Moines.
Hi, I'm Nina Pappas. I am a large risk underwriter in cyber at Beasley. So that means risk we categorize over $3 billion and above in revenue typically. Other carriers might say we're in $1 billion, $2 billion. So in that space, higher complexity risk. Before that, I was in claims, and prior to that, I was an attorney long enough to know that's not what I wanted to do with my life. So, now focusing solely on underwriting.
I'm Garrett Boyd. I am a senior digital forensics consultant at Unit 42, dealing primarily with post-exploitation investigations, whereas right now I'm supporting a client with training a machine learning product they're working on for a defensive model. Before joining Palo Alto, most of my time was in military and government background, either as a contractor or just a military individual covering both DoD, DHS, and the White House.
Well, thanks, and thanks for spending time with us today and sharing your knowledge and expertise. So let's start off, for the group, and try to put some bookends around sort of the size and frequency of the risk to an enterprise, and give folks a perspective on how significant and how frequent cyber attacks can be and what it can mean for an organization.
So if you look at it from an enterprise level, and we have all these enterprise ERM kind of folks here in the room, I mean, it could be everything from data loss, and you need to then identify and inform anybody that you lost your data, to it could be a ransomware attack, and you might not have even backed up correctly, or they could have destroyed the backups, and who knows, you could pay the ransom and not even get it. You could actually destroy your business. So I think it can be little or big, and it can be just data that you've lost or actually data that's been destroyed. So it could be an inconvenience. It also could end up being something that destroys your business. So I know that one of the statistics that I pulled up is 60% of small companies go out of business within 6 months after a cyber attack. So it really depends. I'd also say that 25% of the cyber attacks are ransomware, which then get pretty dicey if you're going to decide if you're going to pay the ransom or not. The average cost of a ransomware attack is $5.13 million, and ransom attacks have been increasing at 13% year to year.
Yeah, I think when we're talking about frequency and severity from an underwriting lens, and I can't speak to our actuarial science because they'll have to tell you how they look at their crystal ball. But for us, when we're looking at submissions, we're looking first at industry class. There's certain industries that get hit a lot harder and more frequently. Healthcare, for example, just given the nature of their business, the kind of data that they store. We see manufacturing, there's a lot of business interruption loss, a lot of incentive to pay the ransom and get back up and running. Universities have become a bigger target the last couple of years. I'm sure you've seen in the news whenever a university gets hit. And a lot of times with our submissions, especially in large risk, we're talking about a university that's storing student data as well as a healthcare system that's usually attached to the university. So we have multiple exposures on that front and a larger attack surface area. Municipalities have also been a big target the last couple years. So we kind of start there. We start with industry class. Is this something that's within appetite for us? Not to say that we won't write those risks, but they have to meet a higher threshold of underwriting criteria in order for us to get comfortable. And then carriers tend to quantify their business based on revenue bands. So like I said, I do large risk, typically $3 billion and above. Other carriers might call that national or major accounts. Then you have your middle market space that would be like the $1 billion to 100 million or 50 million, however they want to quantify it. And then the small space tends to be more digital. So that would be, let's say 50 million and below. There's more of a platform, less underwriting interference when we're looking at the frequency and severity there. And we're not putting out as much limit. So when we're looking at large risk, like I said, larger attack surface areas, a lot more data being stored, a lot more business interruption loss. So we put higher retentions on those, and that's kind of how we're approaching it by looking at industry class and revenue band. There's other factors, but that's the main approach.
For us, it's really the question of when, not if. I mean, I think that's pretty much the statement that we can boil all of it down to is there's no industry that's not going to get hit. There's no industry that hasn't been hit. And it comes down to, like, even some of the numbers Linda provided, like, just thinking about them, I'm like, I think those numbers actually might be higher just because there's no need for disclosure. And that's typically when you're going to find out about the risk or that happened, is that, customer data was involved. And so there is that requirement for disclosure because there are no, not like Iowa's not California, it's not some of the other states that have those disclosure rules. And so no company's going to disclose if they don't have to. So your risk is it's an if statement or a when statement, not an if statement, because everyone's vulnerable. And I mean, you can sit in through the next panel, which I highly recommend. But with the artificial intelligence use that we're going to obviously mention and talk about, it's just going to get easier for both defenders and attackers.
Yeah, and I think something that Linda touched on that I wanted to point out is when we're looking at cyber losses, we're not just talking about a breach, which is obviously the first thing that comes to mind, is ransomware attack. We're paying ransoms. We're paying to get our systems back online. We're also dealing with regulatory, which has been changing every single year. We're dealing with different regulatory, actions that are coming up. We have plaintiffs firms that are just salivating to sue over privacy breaches that, maybe like we've seen with pixel tracking. Some of these are just, big game hunting. So we're getting it from a lot of sides. It's not just ransomware. It's not just breaches.
It's funny, we're going to add any more, and you started on regulations. I was going to say, in the cyber side, if you're thinking about risk, it's also what risk do you hold if you actually have to have regulators coming after you? So between the SEC rules around cyber and New York State DFS around cyber, in the past couple of years, it's been ratcheting up even more. So it might not be the cost of the breach. It may be the regulatory hot water you're in, dealing with the aftermath of a breach or any kind of cyber incident.
Okay, thanks. So now let's turn and focus a little bit on one of the ways to help companies provide protection against these attacks, and talk about cyber insurance. What are some of the benefits and potential shortfalls of cyber coverage? How can it help you both mitigate losses as well as serve as a preventive aspect for you?
I think Nina should go first.
Well, it's all benefits. There's no shortfalls to cyber insurance is what I'm going to say. I mean, if you think about it logically, we don't have to imagine what your worst day is. We've seen it. We're doing it every single day. We know what happens, how to get back up online, how these are impacting our insureds, and every morning we're waking up to some kind of loss. So we are seeing this every day. We know how to have the resources ready for you. Cyber services has really, especially at Beasley, we've really invested in the risk management offerings, and it's something that we've seen across the industry. So complementary in your policy, you might have free phishing campaigns. You might have multi-factor authentication tokens that you can utilize. You might have employee training that's complementary. We also offer for certain premiums. You can have a tabletop. I mean, there's a lot of things that we can do to help you get ready. We offer incident response plan review. You know, we do onboarding calls so that you know when something happens, or when something happens, who to call, when to call, and we'll get the Army in place. The other thing to consider is, you know, these losses and breaches typically aren't happening 9 to 5, Monday through Friday. They're usually on off hours, they're usually on holidays, they're on weekends, and we have 24/7 assistance available to you. So it's peace of mind. Like any part of insurance, you're buying peace of mind.
So if I build on what Nina said, when I've been part of buying cyber insurance and also being involved in companies that sell cyber insurance, if you're a small company and you do not have a massive couple hundred people in your cybersecurity team, you just don't have the skills. So the wonderful thing about buying cyber insurance is they have all those skills that they'll be able to bring in that bad situation. It could be forensics, and if you're really going to do digital forensics, which you know, you really need a certain set of expertise. If you suddenly have to pay a ransom of so many Bitcoins, you need somebody who can turn that around fast. So to me, the best thing that cyber insurance, the cyber insurance is great, but it's also all the support that you would get through that, you know, that crisis that you're in. The other one that's happening right now is, you know, the insurance companies are upping their requirements, and actually them upping their requirements before they give it. Some people are walking away from cyber insurance because they can't implement those. But that insurance requirements, like multi-factor authentication, is making sure that they're less susceptible to a breach to begin with. I do think there's one negative that can come in, if they'll even insure you, right? They might decide that you're not insurable, or they don't want to take that risk, is they also have a panel of experts that they vetted to be part of it. So if you have your favorite and you even have a contract, then you have to figure out who's going to be helping you, like for incident response. If you have signed an incident response retainer, but then the insurance company wants you to use their incident response, you do have to understand all of those players, and you should understand that before you ever get into the situation that you're having, you know, a cyber attack and need to call insurance in.
Yeah, I can add a couple points to that. So in terms of your last comment, when it comes to, we do have a form that we prefer to use our panel vendors, and you're locked in, and you know, we think they're the best, they're tried and true, they're battle tested, you know. We have negotiated rates with them, which only benefits the insured. We do, especially in the larger risk space, we can work with you. If there's an incident response vendor that you want to use, then we can vet them, and you know, there's probably gonna be rate caps, but like there is a way to work with your cyber insurer to make sure that you have a comfortable and you're ready, your plan's in place, and you know who you're going to, and you're comfortable with the people that you're going to.
Which you want to do before.
Yes, before. You don't want to do it after, when there's already someone in your system and we're rushing to get you back online, because time is of the essence with cyber claims. But in terms of requirements, when I started underwriting, it was, you know, send us your website, send us a few, I don't know, do you have firewalls? It was very basic information that you had to provide. Revenue, website, and maybe 5 questions. Now, in the last, I would say, 3 years, we've seen all of the cyber carriers have adopted some sort of ransomware application. Our brokers have also developed their own applications that are more in depth. I mean, we have one broker that's like 73 pages worth of information. And especially in large risk, we're doing underwriting calls. We're getting on the phone with the cybersecurity teams at our insureds, and they're walking us through their defense plan. So we're requiring a lot more information now, and I think underwriting, we've had to be, you know, very technical very quickly. So a lot of self-learning has been going on in our seat. But it's good. I think that that's why we're able to prevent some of these risks and help mitigate and get back online faster, because we've had to learn where things are going wrong.
So you just said everything that in my mind. I'm like, oh, these are all great things. Because like as the defender, one of the first questions I always ask during a scoping call is, when did you notice it? What security points do you have? And shopping for cyber insurance gives you that ability to ask those questions of yourself, doing that inventory yourself. You talked about, you know, it's not a 9 to 5, we're going to get breached. It is October 26th, 5th, whatever it is. And we are coming into what we call breach season, which is the holidays. You're more likely to get breached in the Q4 calendar year than you are any time of the year, because that is after most countries where like ransomware groups and cyber criminals are after their holiday period. And so that's when you're going to get breached. And so having that cyber insurance helps you go through those questions of, do I have an incident response plan? Who do I call if it happens? Is the CISO team on board with what's going on? Do we have EDR team? And, you mentioned rate caps, and I think that's probably one of the biggest benefits I could talk to for cyber insurance is just rate caps. When we were talking about these questions beforehand, I was thinking about this, and just in 2020, I supported a client that was a crypto marketing company or cryptocurrency market company, and they were breached by a nation-state threat actor. We continued our investigation, which was thousands of hours. I worked 3 days straight of 15 hours, and I was one of 5 people that was just doing reviews. 6 months later, they'd been dropped by their cyber carrier because of that investigation. Just the amount of things like best practices that were not being followed. They were dropped by the cyber carrier. That same nation state compromised them again because they didn't finish the after actions. And the number of hours we had available to provide them because they were having to come out of pocket and the rate was different is probably the biggest advocate I can make. I mean, we're talking a couple $100 an hour difference just for even just basic incident response. Whereas on the flip side of that, I supported a client 6 months ago, had cyber insurance. He's a one-man show, does tax reviews. He got compromised due to not updating his stuff. He still has insurance. And so like we recently did a tabletop for him because he's a one-man show talking about how he could have found things out faster because he was compromised on December 18th. He had closed offices on December 17th and went on vacation for 3 weeks. So the ransom note was like, hey, you got 3 days to pay us. I mean, he didn't even check until January 12th. I mean, he's way beyond that limit. But cyber insurance still helped him. We attempted to reach out to the threat actor. We still were able to do what recovery we could, or at least the investigation to tell him how it happened and how to prevent it. And for instances like that, cyber insurance is great.
Yes, cyber insurance is great, and everyone should buy it.
Well, and this was very surprising to me. I'm not a cyber risk expert by any means, but all the additional support that the cyber carrier provides as part of their initial assessment and underwriting process to helping through the claims and restoration was really surprising to me.
Yeah, I agree. I mean, I know that we in the last year have really beefed up our offerings because that's what our insureds want to see. That's the feedback we always get. They want more guidance. We offer in our risk management portal, there's monthly webinars that talk about emerging risks and practical advice on how you can be getting ahead of it. And I think that's very beneficial. And I always encourage my insureds to take advantage of the free stuff because a lot of people don't, So it's great to have. And just one more piece about requirements and how we've really, as you were saying, maybe you can't get insurance anymore. I would say in 2020 and 2021, as an underwriter, it came to a screeching halt. We used to be production, all about growth goals. Cyber's huge, now's the chance. And then it became, okay, if they don't have MFA, get them off the books. We're non-renewing everything. They need to have baseline controls. Because baseline controls really weren't enforced prior to, I would say, the last few years. So it became known across the industry, and a lot of our insureds, too, took a step back. They revamped their systems, they came back, and they were able to get insurance. So we're being very proactive about it because ransomware loss at some point were just becoming, not sustainable. What are we supposed to do if you're not protecting yourself?
Yeah, so let's talk a little bit more about a breach scenario and how that might look if you didn't have cyber coverage. I think you kind of hit on some points of how you would help if there was a cyber carrier. How might that look different if you didn't have a carrier?
So I want to actually back up even farther than that to say, and we've hit pieces of it, before you ever, because it's going to happen, Garrett already said, you shouldn't assume that it's, that if it happens, it's going to be when. You need to have an incident response plan. And in fact, your cyber insurance carrier should be asking you that question. There's help, you can find help online to be able to write one. And in fact, if you're a member of FSISAC, you can get some help with creating a incident response plan. So everybody should have one. And with that, your executive team, which includes communications and legal and risk, all need to be together and understand, what would happen. And so I know it's already been mentioned, you want to be holding regular tabletops. So you want to walk through different scenarios of what could go wrong. That can be at a technical level, and it needs to be at an executive level. And you need to build the right relationships, so you need to reach out to your insurance carrier and make sure that you understand what you're going to do if you have a breach. But you also want to reach out and to make friends with law enforcement. I know when I worked for the Federal Home Loan Bank here in Des Moines, one of the first things I did was call the FBI and invited them to lunch with me. And then I invited them to brief the executive team. So you want to make those friends early, and you don't want to be meeting somebody in the middle of a bad day. And we already talked about cyber insurance. But then once you're in the middle and something bad happens, again, even though everybody views that as a very technical thing, it becomes really a crisis management, communication, legal. You need to be having the legal folks involved. You have to worry about, how you're handling the information. You want to make sure that the data that you learn about the breaches is there, so you can have the forensics of the event. And then you have to assume this could last a long, long time. As I have talked to my peers over the years, it can be 2, 3, 4, 5 years later, you're still dealing with this breach. What happened? Who were the players? You'll have regulators after you. So it's not a once and done. It's going to be with you for a long time. So I think it's a very big cycle.
Yeah, just to add on to that, you're also dealing with reputation loss, and a lot of these very notable companies, it's very public when they have a breach and everyone hears about it. Or you get an email saying, your information's been breached, change your password. So you're definitely going to hear about it, and reputation loss can follow you for a long time. But I like to write insureds after they've had a breach. I think that they don't have the egos that they had maybe before, like, oh, it will never happen to me. So once they live through it and they know where their vulnerabilities are and they revamp their systems, I think that's a great time to get on risk for me. I like new buyers to insurance. We can show them the way.
The idea of just thinking through cases, the biggest thing that you're going to notice, like for mid-breach without insurance, is when you contact legal and you're searching for those incident response folks, so Unit 42 or whomever. One of the questions you have to spend the time. You're already having a terrible day, and then you're basically interviewing incident response teams on who to come in. That's wasted time. I'm going to make a very quick, bold, don't sue me statement. I cannot speak on whether or not Unit 42 has supported any of the people I'm about to mention. I have no idea. But we can just look at the 2 major casino chains in Las Vegas. Who remembers the first one? No one. But who remembers the second one? Everyone does. Because it spent so much time working to try and figure out what happened, how long were they down. Because of social media, that reputation risk is substantially higher than I think it probably ever has been, because people can dime you before you have a chance to have that, that public relations statement gone out, like, oh, hey, we've noticed that something happened, we're actively investigating, so on and so forth. And I think that's just another thing that you don't think about without cyber insurance is the domino effect. After talking about 5 years afterwards, yeah, you're probably still dealing with it. I still don't trust Equifax. Granted, I was part of the DoD during, all of their breaches, and so my social security number's out there and has been 1,000 times. But, it's still one of those things, like, we all have our judgments that are in play. And so just that cyber insurance, doing those tabletops, either a technical tabletop or an executive tabletop, which our tabletop team is fantastic. The number of scenarios that we have that we custom build for individuals, working with other digital partners to create a legitimate event so that way your team can respond and we can actually speak to how you responded versus it just being highly, theoretical, really gives insight. I can significantly think of a hospital client that their kind of business model for the hospital was to absorb those like satellite doctors' offices that are around them as part of their broader network. But what they never thought of was, oh, we've assumed them, but we didn't integrate their technology. So they're in a different security posture than us. So they're way more vulnerable than we are. And I mean, we can see the same thing about universities. Most universities have a connection to DoD or DHS. You can go back to the 80s and look at the Morris worm, which is why the dude got in trouble. The connections between universities to the DoD and that worm compromising not just universities but the DoD is what got him in trouble, and that's the same thing now. What's the easier, vulnerability to get into? The DoD or a connecting partner? Supply chains and all of that jazz.
Yeah, and that's an important part of our underwriting criteria too, is we're asking, are you testing your systems? You can tell me you have everything in place, but if you haven't tested it, how do you know that it's actually working? I mean, we like to see that you're doing a dry run and that you're ready for, the big day when it comes.
So speaking of the big day, right? Can we spend a little time talking about what you do when you have a breach? You've noticed a breach. What are some of the first steps that you need to do?
I got this one.
Yeah? Call your insurance carrier.
Yeah, don't turn anything off. You turn stuff off, we lose all evidence. A lot of the malicious actors are running in memory. They're running in this something that's volatile, which means that as soon as you turn off the machine, you lose access. So what do? Just if you can't logically segregate it, just pull the network cable, and we'll come back to it. We'll find a way for you to access it later, but don't turn it off. And yeah, very, very first thing, contact your C-suite, contact your insurance, contact legal, contact PR. There should be, as part of that incident response plan, that should be one of the steps that the incident response leader or event commander, depending on terminology you want to use, should do that immediately while an investigation is happening.
Yeah, and that's why it's so important to practice, because you don't want to panic when that moment comes. I remember a few years ago, I was going to do like a CE at one of my brokers, and I walked into the office with donuts thinking like, oh, it's going to be a good morning, here we go. And all their screens were just out. There's ransomware across all of their systems, and they're running around like chickens with their heads cut off. I'm like, all right, everyone, first of all, calm down. Did you notice the carrier yet? Do you have everyone in place? So I would say, yes, have a plan. Don't turn everything off right away and pull the plug, but call your hotline. That's what we're there for. We're going to get negotiators on the line. We're going to get legal in place. We're going to handle the notification if you need it. So, I would say start there.
I have a random question that just occurred to me.
I'm scared. Yes.
Well, we've talked about negotiation. Like, we've been floating around this term. The FBI says not to negotiate. How does a cyber insurance carrier make that determination?
That is.
Other than groups that have been obviously deemed sanctioned that as because they're part of nation state activities, but like, let's talk about ones that aren't, like some of the new kids on the block, like Black Alpha or something like that.
That's a whole separate team at Beasley that handles that, and it's not my responsibility. But they're there. We figure it out. They have the experts in place to do that. I'm on the front end. They're in place on the back end because they know what they're doing.
In general, I think the negotiation, it's one of those questions I'm always curious how cyber insurance companies deal with it, because the FBI is very much like, don't pay the ransom. And I'm like, that's for risk just for a company. I don't know how you can justify, hey, we don't have backups. Without this data, we're out of business today. How do we not pay this ransom? And so I've just generally
it's a
been
difficult
curious.
landscape to navigate in general. I feel like every year we start a new year optimistic, like this is going to be the one where we get to rest, and then something new comes out. So yeah, we have compliance teams in place that handle all of that, and I guess we just do the best we can.
Yeah, and there are attorney services connected with your cyber carriers and others that are trained to deal deal with that, and ransoms do get paid. I mean, despite what the FBI says, the statistics are pretty clear about the large number of large ransoms that are paid to these threat actors.
I do think that's, I don't want to make a broad statement, but I do think that that is slowing down a bit. I think that with the controls that we have in place, and with everyone becoming, which kind of leads into, I think, our next point, you know, we're learning what's going wrong, and we're putting tougher controls in place, and we're making it harder for them to get to the point of ransom, or we can get our systems back up online so we don't have to pay for these decryption keys. I think that that's helping in terms of paying these ransoms. I think we've had a lot of success where insureds are able to get around it and get back up and operating and get the bad actor out of their system. A lot of that's early detection too, knowing that they're there.
So let's talk a little bit about forensic evidence and what you might find kind of post-breach or even in a breach, and how that might inform what we do differently going forward.
I was just talking to them before we started. This has been one of my favorite questions, not mainly because it's geared directly towards me, but speaking to a coworker of mine over the past couple of days, we're prepping to do kind of our annual statistics. And since 2021, the typical like dwell time, the idea of how long is a threat actor in your environment before you notice, in 2021 was like 21 days, so like 3 weeks. That's a long time. It's 2 years later and it's still 19 days. Assuming they're not extorting you. If they're extorting you, then it's like 8 days, because then you get the ransomware notice and that's a whole nother ballgame. But the bigger problem is that the median time to exfiltration of your data is hours. In 2021, it was about a week and a half. It's now hours. So they're in your environment, and as soon as they're able to, they're exfiltrating data, whether it's good data or not. They're just trying to get data out of there, because as soon as they get your data, you're more inclined to pay. And so when we're talking about forensic evidence, that is what it is. Everything we do on a computer is, or even your cell phones for that matter, is logged. You open up a folder, there's a log of it. You execute a program, there's a log of it. You save a document, it's logged. That's a lot of information. When you're interacting with servers, trying to log in, all of that's, logged. And having a team that at least collects that information and is reviewing that information, because collection without, looking at it is kind of hey, I'm collecting rocks and I don't know what to do with the rocks. So you have to be able to look at that data so that way you can find that, oh, hey, this one computer just sent 21 gigs to a random Google Cloud server or Dropbox or whatever it is. You can't find that without having that data. And even us, if you're not collecting it, there's no way for us to tell you what happened either. And that goes back to my statement from the last question, don't turn anything off. You turn things off. We've lost our ability to identify who patient zero is, whether that was spear phishing or a vulnerability, and we can't tell you because during an investigation. Our investigation is to tell you, looking at the evidence, oh, hey, this server was compromised because this user was compromised. This user was compromised because of X. Well, if you don't have that information, we can't tell you, well, hey, they got in through a firewall vulnerability, because you don't keep the logs of the firewall. You don't keep the logs for the host. And so maintaining good log sources and, saving them and having a good dashboard to review unusual events. So that means knowing your baseline, which requires pre-work that your cyber insurance carrier or even your IR retainer will tell you to do, is very important, because without it, our investigation is very limited. I can speak from the rooftops on this one. The number of investigations I've done where looking at firewall logs, firewalls don't maintain a lot of space. They're primarily just used to filter information. Either they're set to that they only trigger and watch or log blocked events, which is, if you don't do anything beyond the default, is blatantly obvious things. Or they're only maintaining locally, which gives me maybe 24 hours on a medium to small business. We're talking an hour for a larger business. Is not enough time for me to go back the 21 days to tell you what happened. You have to maintain this information, or we can give you best guesses, and we have enough experience to be able to, give you that. But we can't give you definitives, which runs into the risk of the SEC being like, oh, hey, was there a risk of, your information being taken, and so, oh, you have to report it, you don't report it, and then it becomes another issue. The risk just mounts and mount without that forensic evidence.
Yeah, and forensic evidence is critical to informing our underwriting too, right? So, with manufacturers, for example, when they're still getting hit, but, at a point when it was really ramping up, we're looking at it, and from a forensic standpoint, where are they getting in? Operational technology. Let's start asking questions about how you're securing your operational technology. So we need this information to be able to go back and inform our insureds too. Hey, this is how it's happening to people that are built just like you. In your space, in your sector, in your size, this is the kind of losses that they're seeing. Are you protecting yourself against that? Because, if this hacker, if it works once, they're probably gonna try another guy that's similar in size and that has deep pockets like you do. So, I think it's really important, and a lot of times too, especially in large risk, we underwrite to severity, right? So if you have a limit loss and it's maybe 2 months into your policy period and you're asking me to reinstate your limits, I need to know that the vulnerability has been taken care of. We need to go through the forensics and figure out exactly what went wrong and what you're doing to remediate that exposure. So, we need this information, otherwise we're gonna keep paying the same losses over and over, and we're not gonna be protecting ourselves and our insureds.
At the end of each forensic report, there should be a list of IOCs. Share them with Linda's group.
Yeah.
Or whatever industry you're a part of. There's a ISAC group for your industry. There's one for, car manufacturers. There's one for, government agencies. And share them with the FBI, local law enforcement, whomever. Because, without that sharing of information, it takes the FBI a lot longer to take down groups like the Ragnar group they just took down a couple weeks ago, or, naming, nation state threat actors that, and sanctioning those groups. Or, we can go through time and look at all the different APTs they've taken out without sharing information. They're basically just hunting the dark web, waiting for a threat actor to be like, oh, hey, we compromised whomever, and that's when they go and reach out and be like, oh, hey, did you know you were compromised? And if they say no, then it starts an investigation. If they say yes, they're going to be like, well, why didn't you share with us? Sharing that data prevents you from being attacked, hinders you from being attacked again, because your partners will be more inclined to share with you. And then it also stops that trickle effect, because you getting compromised in and of itself shouldn't increase rates all over, and I'm making a very broad guess. But if, we can look at car manufacturers not being insured anymore because they're too easy to steal. Well, if an entire industry isn't protecting themselves because they're not sharing information, cyber insurance is probably not gonna.
We insure car manufacturers.
No, I wasn't talking about car manufacturers. I was just saying, if the car, insurance companies don't cover certain brands of cars in some states because they're so easy to steal. If the insurance companies are easy to break into because they're not protecting themselves, cyber insurance is going to be less inclined to protect them, or the rates will be a lot higher because the industry as a whole.
Yeah, there's very few carriers right now that will even touch municipalities, so it's true. If you're not sharing this information and it becomes, healthcare is always going to get hit, that's fine. Our healthcare probably has the most mature cybersecurity controls that I've typically seen in our submissions. But when something like municipalities, where they don't necessarily have the budgets to get the controls in place either all the time, a lot of carriers won't even touch it. So it's true. Either your rates are going to go up, or you're not going to be insurable. Yeah, it's good to share the information, and we can all protect ourselves together.
I can't speak highly enough of Linda's group over there. The ISAC teams in general, they're a wealth of information. Half my job, I was a contractor at the White House doing cyber threat intelligence. 90% of what I gathered to at least give us a baseline came from different ISAC groups. So please share with the ISAC groups.
So I think we hit that one well. What do you see in your individual pillars as emerging risks as it relates to cyber exposure?
I knew this one was probably mostly for me. So I work with hundreds of financial services companies, and part of FSISAC is to build these community of interests around different topics, and you're seeing over and over again. So everybody would, as everybody would expect, artificial intelligence is a really hot topic. It also is different than maybe risks in the past because everybody is embracing that they want to do it. There's so much to be gained from it. So the answer is not do artificial intelligence. It is trying to understand and manage the risk around it. So as we're talking and looking at artificial intelligence and you think about the risks, certainly data privacy, people start asking these large language models, generative AI, all sorts of information. Well, if they're uploading sensitive information to ask the question, you just have data loss. So you need to think about that. The other one is algorithm bias. If you look at artificial intelligence, it's looking at what you did in the past. And if you had bias in the past, all of that is coming forward. Certainly regulatory risk, because worldwide it's very different and it's maturing and it will probably change. So what's happening there? Unexpected results are another one. I heard a statistic, but I don't think that I wrote it down, but you might not have the right answer. So you could be asking this thing and it might not even be giving you the right answer. So everybody is working on this problem and how in the world they manage it. And one of the ways, and it's consistent across the financial sector, is there are cross-functional teams looking and deciding how a company can move forward and get benefit from AI, but also manage the risk. And you have legal and compliance and risk and IT and security and business people all working together. That is pretty standard right now. Another one is post-quantum computing. It's coming. It's not now, but again, it's a hot topic within FSISAC right now, within all its membership, trying to sort out what to do. It's a bad day is gonna come, and your encryption's gonna be broken, and the hackers are already collecting data, knowing that this is gonna happen in the future. So it is a scary thing, and I know we'll get to what do we do about it. And supply chain's another one. Supply chain has been a risk for decades now, that you worried that you were gonna partner with somebody, you're gonna buy a product or use a service, and you did due diligence. But now the attackers are really attacking that supply chain. And the fact that as we've moved to cloud and cloud services, your IT is spanning just a whole, web of different suppliers, and the risk to that has just been exponential as the hackers are now going after them. So those are the top things that at least I see within FSISAC that our members are talking and trying to improve how they're attacking that risk.
Yeah, definitely AI, which I know we have a panel about that following us, so I'll leave it to those guys to talk through it. Not necessarily emerging, but I saw a report this morning from one of the major vendors saying that 70% of losses are coming from human error. So, we can do all these things that we said. We can ask for all these controls, and we can, look to support our insureds, but really employee training, I think we just still need to be focusing on that, and business email compromise is always gonna be an issue.
But I think that already the financial sector is seeing that AI is being used by the hackers, where it used to be when you were looking at a phishing email, you were looking for things that were obvious, bad spelling, something's not good. Well, they're using AI now to draft marvelous phishing emails to you. So,
Yeah.
so things that happen that you could maybe detect before, you're not going to detect now because they're using this technology. The hackers are using the technology. I actually have talked before that the hackers are all sharing. They share quite well. They have a whole underground economy being able to share things, and they don't have to pay taxes. So, I think that they're using this technology just as much as we're trying to use this technology, and they're going to have smarter attacks on us, and we have to be ready to respond.
Yeah, it's not just email, it's also voice generation. So, when you're calling your IT help desk to change your password, it's getting very sophisticated, and we need to figure out how we're going to protect against that.
The human error and supply chains. Those are, I can mention them again, but going back 5 questions, you can mitigate a lot of your human error, at least with access by requiring MFA, multi-factor authentication, preferably not a cell phone text message, but like using dual authentication or Microsoft's or even a physical token. Those are going to prevent a lot of, because yeah, sure, okay, cool, change the password, but then they're still going to get stopped by, okay, I logged in with this new password, but I don't know the MFA. And so between, I think we're going to have to re-educate users. I had a phishing email come in through our IT team, going to something I know you mentioned earlier, maybe not today, but at least in the last couple of weeks, working with your IR cyber insurance to do phishing training where they send emails. The emails you send internally are going to be a lot more well crafted to what's going on in your environment than others. And basically, so going through that training, I had an email come in, and while I was talking about this, I had an email come in this week that I had to second guess. And I was like, wait, this is a weird email. And it took time. And we can go and look at one of those Las Vegas casinos. It was an IT person that clicked on a phishing link that compromised the entire network. And so it happens to everybody. And so just retraining, giving them a second to think about it, giving them some indicator that this seems odd. But what seems odd for me is not the same thing that will seem odd to them unless we all have the same training. And I'm not talking about the terrible DoD training. If you've seen it, it's terrible. But just train your staff to question every email that comes in, especially emails that they were not expecting or emails to the change to the status quo. And what I mean by that is like cyber threats aren't just ransomware. It's people getting into the business email compromise, and then they see an email chain for paying a vendor. And then they send an email saying, oh, hey, the vendor needs the update to the payment to go to this, bank account. Oh, and there's $5,000 gone from you, and then your vendor's hitting you up in 2 months, like, hey, we never got paid. And that happens a lot. So just training your staff to look for changes in the status quo, and just to be wary of supply chains. We can all rewind a couple years to SolarWinds and look how much damage that did. It happens a lot more often than I think is as public as SolarWinds, but it will happen again.
So we're about at time. Looks like I just cut off Linda. So maybe one last opportunity for final thoughts, and maybe we'll ask one question from the audience, and then end the session.
So I was going to pick up on, we've talked about multi-factor authentication multiple times. It's in regulations like the New York State DFS cyber law. It's required by your cyber insurer oftentimes to even get cyber insurance. But the hackers are now finding ways to go around it and attack and get in the middle of that and be able to still take over your sessions. So it's a cat and mouse game. We add more controls, the hackers find new ways around it. So I actually think that's the most interesting thing about cyber insurance is it is not a stagnant thing. It is a constant race, and you have to learn from, and you can take places like the ISACs or CISO or any of those and continue to make sure you understand how the attack vectors are changing so you can then take actions and try to improve your cyber insurance. And still at the end of the day, you better be ready for something didn't work and you're having a bad day and you need to call your cyber insurer and start your incident response plan.
So any questions? Maybe we have time for one, and then we'll break.
Did we scare you?
What do you think a good pass rate is for these phishing internal, the internal IT group sends out, fake phishing emails? Do you have any sense on 5% of the people click onto it was good, 2%, 10%?
For those of you online, the question was, what's a good pass rate for phishing emails? I think it's really dependent on the enterprise. When I was working on the Marine Corps Red Team, our pass rate for internal phishing emails was 75%. But again, they're well crafted. They're targeting things that are happening on the base that we're going against. So like, we cheat, and your internal teams should cheat. However, I know there's companies out there that say like PhishMe and one of your partners, you mentioned it over the past couple weeks. They say something like 25% prior to training, and then after training it drops significantly. It's very dependent on the enterprise.
I think also you want to look at, are you keeping track of the people that are clicking? Are repeat offenders getting additional training? I mean, and sometimes with insureds, we see where repeat offenders are losing access completely to their email. So, I mean, I think it's really, that portion of it is important. If they are clicking, are you remediating them? Are you giving them new lessons on this?
So I certainly, it's actually a question that I've seen lots of FSISAC members weigh in on. So a lot of companies actually have a 3 or 4 strikes and you're fired. But in my experience, you can't look at everybody the same. Some people have forward-facing jobs that they have to open emails. And so what I've also seen successful is to understand who those people, what jobs are those, externally facing people where they have to open some of these things, and can you add any extra controls around them to help protect yourself? So I think it's way different if somebody clicks on it and they just aren't listening to any of the education. It's a whole different thing if somebody's job is to really be dealing with external folks, and you probably need to, it's a challenge on the security team on how to protect them better. So I don't think it's not just 4 strikes and you get fired. We should also figure out how to reduce the chance that people are going to have problems.
Yeah, we're going to look at email filtering solutions too, and we're going to look at, are you tagging it as external? There's other things that you can do to help at least flag it, but they get through.
Well, please join me in thanking Linda, Nina, and Garrett for a terrific session. And then look forward to seeing you back at the next session in a few minutes. Thank you.